It's 2026, interest rates are high, the housing market is shifting, and you're probably wondering, how am I going to start investing in real estate? Well, today we are going to get into what is real estate investing, why you should invest in real estate in 2026, and how you can get started. And stay to the end because we will also answer some common questions and address some mindset blocks that block new real estate investors.
First, what is real estate investing? Real estate investing involves purchasing, managing, renting, or selling properties, such as residential homes, commercial buildings, or land. The goal is to generate profit through rental income, capital appreciation, or tax advantages. Active investing directly own and manage properties or flipping, which involves buying, renovating, and selling for a quick profit. Passive investing is investing through REITs, publicly traded companies owning income producing real estate, or real estate investment groups, commonly known as syndications. Different strategies of real estate investing, such as house hacking, very famous, or burning, things like that in the past.
That's what Lynn is famous for. She does burrs and she's house hacking currently. So lots of cool strategies there. One of the biggest questions that I see is the interest rates are still kind of high. The housing market's also crazy too with the high housing prices and all that. So people are always wondering like, should I still invest in real estate? And yes, we both believe that you should still invest in real estate because there's lots of benefits that come with it besides just buying a property. Number one, obviously, the main reason is to generate income. Right now, like everything's kind of like crazy. Last year, we had like a lot of layoffs, and the cost of living is higher, groceries, everything is just more expensive. So that time of being able to make it with just a regular 9 to 5 job is not enough for most families, most people anymore. With real estate, you can generate multiple sources of income because each property is seen kind of like its own little small business. And so that's its own source of income. So you spread out your streams of income and you could create that through obviously rentals, so you get rental income, or some people like selling, doing flips, and that's a profit as well. The other thing is tax liability and inflation. Not going to get too much into the taxes right now, but there's a few tax advantages that you have with real estate. You can depreciate your property. You can deduct a lot of the expenses that you take when you are managing a rental property, like your property manager, maintenance, and all of that can be deducted and help reduce your tax liability, which means less taxes that you end up paying. But also the inflation part of it, like we saw kind of last year and a little bit before that, that inflation was going like high. Having your money in a regular bank, you were basically losing money. The bank's not really giving you much in return. But when you put that money and invest it into a rental property, you are having that buffer with inflation because a house appreciates and also you're getting that rental income. And the other thing that a lot of people don't think about it, you could borrow that equity. That's cash that's just sitting in your property and you could use it. Lynn used it to buy some rental properties. I used it to fund some a surrogacy journey and some infertility treatments. The best one, of course, is to use it to buy an asset. But I do want to say and address that there are some risks because it's not all, rainbows and sunshine with real estate investing. The markets, it can, go up or down, and depending what you are trying to do. For example, if you're flipping a house and it takes a downturn, then you might potentially lose money or have to sit on that property. And then depending on some markets, like it might just be higher to get into it. Of course, the management of the properties can, have its own challenges, which is why I like to just like pawn it off to a property manager. And of course, your money is in that property, so it's not as liquid. It's not as easy to get that money unless you use like a HELOC and stuff like that. But even so, that sometimes takes like up to 30, 45 days to close on that and get your cash. So it's not so easy to just go to your savings in your bank account and withdraw that money.
Like Violeta mentions that there are risks to this investment. And I think that's why it's so important that the first step that you have to do is to understand why you're doing this, why you're investing in real estate, or why you're considering it, right? Because it will be trying, but it also can be rewarding. Maybe your why is you want more time with your family members. Maybe your why is you want to create generational wealth for your children. Maybe you want to accelerate your way out of your W-2. Maybe you want to create something like a work of passion to be able to house people low income, veterans, people with disability, or people recovering from addiction, or maybe even the forgotten elderly. There is many people that I know that work in assisted living facilities, so rent out their homes to assisted living facility people. And once you identify your why, it will give you enough motivation and enough drive to deploy that, right? Next, you would have to look at your strategy. And when I talk about strategy, is like the first thing you have to recognize is like how much time you have to offer this new investment. Are you able to self-manage? Do the numbers work in your backyard? Do you have experience in any part of the real estate market or transactions? Do you have family members that are realtors or contractors? If you don't, then don't worry. Plenty of people have started without any of these resources. When I started thinking about investing in real estate, I was trying to get a hold of anybody closest to me that has any type of rentals. And then so I had a distant aunt that with her husband, I believe she has 4 or 5 rentals in the city of LA. And when I called them up and I asked them, like, how did you do it? How did you invest in real estate? They told me that, first of all, they lived on one income. Person A would work and basically would work as well, but person A would be able to cover all the bills with one income. It's a little bit harder, right? In a higher cost of living area, that's a little bit like unattainable, at least from what I've seen, from what I experienced in my millennial generation, right? And so they were able to purchase real estate cash from saving years after years. And if I apply that strategy to my life, I would not be able to buy real estate in my backyard for about 30 years, right? Even if I save 50% of my income, then I still wouldn't have like what, $25,000 every year times 30 years. That probably would make me be able to buy one house in LA. And then before you comment to me in the comments, LA is expensive. I know we have sun, we have the weather. I know. Okay. But maybe that is a strategy that's possible in your backyard. Maybe you live in Pennsylvania. Maybe you live in Indiana. Maybe you live in Texas and you're able to purchase a home cash by living on one person's income. That's the strategy that works for you. It did not work for me. So that's why I had to go out of state investing. Next thing that you have to think about after strategy is your finances. Let me be very clear. Budgeting, investing, and managing your real estates are honed in the same skills. There needs to be discipline. You need to understand your number. You need to understand your burning rate, how much cash flow you're able to bring in with properties. Who do you need? First, if you are investing in the MLS, if you're investing in the market, you need a realtor. That would be your first step. If you are buying conventionally, that's your strategy, 20% down or 25% down, then you need a broker or a community bank. And you need to be able to look up these resources. If you're not going to self-manage, then you need a property manager. And so you need to find that. Those 3 people need to be in your team when you're deciding to invest. And you need to create a plan. If you're going to do rentals, buy and hold. If you're going to flip in a market, if you're going to traditionally save for down payment, if you're going to rent out rooms in your house, which is something that I did when I started investing. I didn't even know that was considered real estate investing, but I wanted to offset the mortgage on my house. And the easiest way that I could do it is to rent out to friends. Maybe you want to convert your garage in an additional unit. Another thing that I've done, I converted a garage in the back of my house into an additional unit that's been rented now. Maybe you're wanting to buy a vacation home, and when you're not using it, you wanted to make it a short-term rental. Before you jump into short rentals, check the municipal area laws that apply to short-term rentals in your area, because that can deter your definitely cash flow and your strategy. But some things to consider.
I want to get into what's holding a lot of new or potential real estate investors back. From what I've seen, first, it's always fear that they're just bad with money. And a lot of times it's not that you're bad with money, it's just you don't have the resources or you just don't know how. So definitely take the time to start learning how to manage your money through budgeting, because that is, again, just reiterating what Lynn said, that is a major skill that you're going to need when you're investing in real estate, because you have to first, obviously calculate the cash flow, make sure that a property is going to be profitable, and then manage the expenses throughout the life of that property. And the other one is fear of losing money. Well, if you build that skill and start learning how to manage that money, that's going to kind of like, I won't say that that fear necessarily goes completely away, because I still have some of that, like, kind of try to rise up. But because I have, some money management skills, and I've built that confidence now that, I've had a few rental properties, and going through the guide that Lynn was talking about, understanding your why, your strategy, and having a strong team and creating your plan, that helps combat those fears right there. Some people just lacks a little bit of the skills and the education that you need for real estate investing, which we are creating a series to help educate a potential new real estate investor. So definitely check that out. This is part of a playlist. So definitely check out the other videos of us going through all the other types of skills that you need. There's books out there that you could start building those skills. But really, you just got to kind of like assess where you are right now, figure out what kind of skills you need, and then start building on those skills. You don't have to know everything. You just kind of have to know, like, what are you going to need, because a lot of it comes with team members, with realtors. They can help assess the rental market, and your lender could help you run the numbers too. I know I have one that I'm talking right now, and he is going to help me do all the numbers, actually pool, taxes and other, and rent, and work with my realtor to pool potential rental income. So they're working together with me, and we're going to create a more accurate picture of what to expect. So that way, I lower that risk of, losing money on a property. The other thing I want to talk about is expectations. A lot of people get held back because this is not a, get rich quick scheme. This is a long term game. Even if you're like flipping properties, you're slowly building. Like, yeah, you sell these properties, but then you still have to slowly build up your funds as well. With long-term rentals, same thing. We're stacking up multiple sources of income with each rental that we buy to eventually buy back our time, or replace our W-2 income. Don't think that this is going to be quick and easy. It's so easy for you to think that, because you'll see it on the internet, on social media. Your journey is your journey, because it depends what you can do. The other thing that I want to talk about is the guilt. Some people don't want to be part of the problem with the housing affordability and all that. And also you hear the bad, stories of bad landlords and stuff, but you can choose to be part of the solution. For example, Lynn goes after, well, me as well, we go after properties that no one really wants. Especially Lynn gets some really beat down properties, and the average home buyer is not going to go for one of those properties, because they don't want to. get into that because it's hard to fund. You usually have to get cash or a hard money lender or something like that. And the average home buyer has like a conventional loan or something. So they're not able to get those types of properties. They might not have the resources to fix that property. So you could be part of that solution because now, even if you're a flipper, you are bringing that house to the market for a home buyer to buy or for rental. I know here where I live, there's a problem with not enough housing, but there's a lot of rundown properties around here because it's a rural area and it's starting to, grow. So you could be part of that solution. And again, be an ethical landlord and, just, treat your tenants with compassion and see them as humans and find a harmony with making income, but also providing some good housing for them.
I wanted to address also some of the common questions that are asked and break some of those myths that you are believing in yourself. Do I need to be debt free to invest? Right now, I have a car loan and I have student loans still outstanding. So me, myself, and I'm Violeta, she has multi-family properties and I have 11 rentals. I still have outstanding loans and my student loans, and I still have a car loan, but I do not have high interest large debt. So most of the interest that I pay are 5 and below. But if you have anything lower than 10, I believe that you should not wait to invest in real estate. There are many opportunity costs. And then a lot of people would think about timing the market. I'm going to invest when the market crashes. I'm going to invest when uh, houses go down in price. I'm going to invest when interest rates go down. But timing the market, just like buying stocks in the market, does not beat time in the market. This is a long-term investment. And then so the earlier that you get in, the more beneficial it's going to be for you. What if I live in a high cost of area? And I'll be like, me too, girl. Me too. I live in Los Angeles. My rent is high. My mortgage is high. And one of the things that I didn't even know was a thing was like to house hack, right? If you are single or you have a family, if you are thinking about purchasing a home that's for yourself, you at least need to consider how to house hack because it is so powerful. Most Americans spend about 30% of the income on a mortgage or rent, right? Poof, like that. And one bill. Think about if you can offset some of that expense with renting out rooms, where renting out your garage, where buying a duplex, living in one side and renting out the other. 30% of your expense, of your budget, of your burning rate can be offset by the house hack. Buy in a lower cost of living area, you can definitely invest that at a distance. Ideally, you want to start in your backyard. But if that's not possible for you, if you don't see the numbers work out, if you've been looking at the market for more than a month and it doesn't work out for you, then you can consider investing out of state or investing at a long distance. Another question I ask, can I still make money in 2026 with the high interest rates? And I will tell you that that is totally doable. Right now, I'm putting a pause on myself, on my market, because I have a goal of building up reserves. But I have people sending me messages of houses that I could buy right now. And if I run the numbers do work still. So you have to find that market. You have to find that level of comfortability that you're going to be able to do. Look at our podcasts. Please read the books. Please get around people that are also doing it because it is possible. If you have any questions, drop your questions in the comments too.
So again, just to recap, real estate investing is basically finding a way to make income with your current house or, a property that you invest in. And again, go through the quick little guide. I think that's one of the biggest hurdles is you want to invest, but then you're like, I don't know what to do first, what to do or anything like that. You kind of get stuck just thinking about it and you research it and all that, but you never take action because like you don't know what to do. So that's why we wanted to create this episode to give you some actionable steps to get started. If you are still trying to decide, hey, am I ready to invest? I do have a 5-day mini course. It's going to come through email, and it's just going to walk you through some of the things that Lynn and I talked about in this episode, more on mindset and checking your finances and getting yourself ready and see if you want to get into real estate investing. And that is going to be linked down in the description or the show notes, depending if you're watching on YouTube or just listening on the podcast. Definitely check that out. It's completely free. And again, Lynn mentioned this is part of a series, and just a quick little teaser for next episode. We are going to get into how to calculate cash flow, how to analyze a property to make sure that it is profitable. But yeah, other than that, make sure you follow, share this to anybody you think might help, and we will see you in the next episode. Bye.